Hey there, traders. It's Wednesday, October 8, 2025. We had an update. Pretty much all the loss from yesterday across most markets has been regained. We'll come back to this chart shortly and dig into it some more. This morning, a few minutes before the opening bell, this got published. You can see the levels, not a lot, and they were pretty spread apart. The levels that are in this lighter blue color, 670.08 and 667.34, they were reference levels. You can read the notes here to understand why. Essentially, if price got above the higher one, then that was a good sign for the bulls. If price got below the lower one, that was probably a better sign for the bears. So really didn't want to trade them. I wouldn't want to trade against them. So that left a lot of open space in between. I did identify some levels in between. I didn't trade them. And the one trade I took, which we'll look at shortly, did not work out so well. But this is what we had going into the morning. There's a picture, a screenshot of the chart at 9:25 a.m. Of all those levels, here are the two that were hit. 670.08 was not traded, and for good reason. We wanted to see if price could stay above it, and they did. Now, I wasn't willing to jump on board and ride this thing up, but that was a sign early on that the bulls were probably in charge and they were going to go higher. And like I said, here's all the space we have between. And just to show you, if price were to get down below 667.34, that would have been bearish behavior, but it didn't happen. So now price is up at 672.54. They stalled out right above 672. It had a pretty good drop. But if we're playing by the rules and we don't have any other levels, we see no other reasons why not to go ahead and go short in the E-minis when the SPY hits 672.54. Here's how the rules would have worked. You would have gone short at 672.49 as your 5-cent buffer. I'll go ahead and put some reference levels up here. What we're looking for is a pullback of around 40 cents in the SPY, which is 4 points in the E-minis. So that's our target. And we'll have a fumble threshold. That's what I call the fumble threshold. So this is roughly 4 points out of the money, or 40 cents in the SPY. And they pretty much just hung out at this level all day long. Playing by the rules, there would have been a reversal just slightly out of the money. The reversal did not work. And then that reversal turned into another fumble. And that's what I call a TKO, a technical knockout. When you've been knocked down too many times, just jump out. It's not good to trade anymore at that point because clearly the levels weren't working and you read the market wrong. So it was definitely bullish, but this could have been a target. They could have reacted more. When they didn't react, they didn't pull down far enough to give a base hit any of these times. A little bit of indecision. And by the way, we're still like something like 50 S&P points away from that trend line. So they're really nowhere close. They keep stalling out around 673, like we talked about in yesterday's video. Here is my trading activity. I'm just going to scrub ahead here until price gets up to 672.54 because I didn't trade anything until that point. I did identify that level at 671.65, but I did not trade against that. It would have worked out if I did though. So I went short at 672.54, did not adjust it with a 5-cent buffer. Either way, it didn't make a difference because I just stayed in this trade for quite a while. There we go. As soon as it hits the SPY, or as soon as the SPY hits this level, I have a trigger activation order that is triggered or activated in the E-minis to go short with, in this case, just 2 contracts. Really wasn't all that confident about it. So I figured I'd enter a relatively low risk trade. And so this thing just went back and forth, as you already know. And when I jumped out, it wasn't quite at a wash, lost a couple points or so. You'll see everything disappear when they got back out of the money. If they couldn't give me this for the first time, and they came back down again and still never got to the base hit point. But this is me pretty much just keeping an eye on it until, well, after 1 o'clock or so. There we go. Stop recording at that point. So no other trades for the rest of the day. Now this is the log PBR, playing by the rules. Would not have traded against 670.08 per the game plan. And then 672.54, as we just looked at, resulted in a fumble and then another fumble. There's your TKO. Just going to track that so I kind of know what my percentage is. And by the way, this is just for the year 2025. All the metrics you see here, averages and rate of return and so forth. And then on my trades, the Sam's trades, I lost 2.25 points on 2 contracts, $225 in the hole for the day. So while the market was up today, still kind of flat, at least where they stall out. They keep stalling out at this point here, 673. So if we were to come down here, I guess I don't have my trend line on. Let's reset this. Trend line was in this neighborhood from this drop to this pivot here. Kind of gives us just something kind of reasonable to compare price with. And I think this is around 50 points or so. Let's get into an hourly chart. So from around 673, they were to continue up right now, 670, almost 678. Yeah, that's 50 S&P points. So they're really not close. Of course, they can do that in a day. They could do anything. I'm just wondering why they're having such a hard time getting above 673. In fact, I'm going to cut the video, do a little bit of work, and see if I can discover something that I haven't noticed before. I thought maybe I could find some type of Fibonacci price extension or something that would land around the 673 mark. Depends on where it was run, but really nothing's given me an exact reason here. If anyone has any ideas or thoughts of what's going on here, this could be short-lived. We could see a gap up tomorrow. Anything can happen, but in 4 days, topping out at 673. Anyway, that might not be that helpful. In fact, something I've noticed is if I go into detail about some of my thoughts about what I think the market's doing, and really it's just my opinion because I don't really rely on macro market activity and market behavior and things that are happening in the big picture when I'm trading my levels, because the levels are pretty much just intraday trades, just looking for 4, 5, 6 points or so at the levels on any particular day. Is it more likely to be bullish or bearish, or even what's happening down to, like, say, an hourly perspective? But these levels are what they are. They're just places where bulls and bears are likely to fight it out and give me some opportunities to pull a few points. So anyway, what I've noticed is when I get into detail about my opinions of what the big picture looks like, I tend to lose a subscriber or two. I don't have a ton of subscribers, of course. I do appreciate those of you who are following along, but I just wonder if there's a connection there, because I'm perfectly happy just to say, hey, here's the levels, here's the game plan, here's what happened, end of story. And just a quick look at the logs to see where we're at in the big picture. But in terms of overall market forecast, maybe there's no value there for any of you guys, or for me for that matter, in terms of making these videos. Anyway, something I'll probably reconsider going forward. But at this point, that's all I have for today. Thanks for watching. I hope this was somewhat helpful. If you did find it helpful, consider liking the video, subscribing if you haven't already. And if you left, well, sorry to see you go, but I guess you're not watching anyway. So that's neither here nor there. No big deal. So thanks again. I'll talk to you again soon. Have a great rest of your day.